Hello and welcome to another trading day right here in Lagos, Nigeria. Well, the second to the last one, final trading day tomorrow. But let's get a sense of what to expect with the markets that we track here and what's happening at intraday in the global markets. Let's start off now with the metals market. We see the metals market, we see some big price movements there, 0.27%. That's for gold. $2,175. That's what we're seeing per gold ounce at this time. Platinum, that's up 1.53%. We've seen this too as palladium and platinum. They've been going up for the past couple of days now, while we've seen gold there having a breather with the record movement. We've seen $1,083. That's what we're seeing for palladium, up 1.17%. Let's look at global oil prices now. We see the market is supported by some strong demand in the U.S. after gasoline stocks hit a 3-month low, and crude stockpiles that dropped unexpectedly with supply concerns remaining after Ukrainian attacks on Russian refineries. And we're seeing Brent 0.23%, $84, a strong move up today in early trade. And we see the cheaper grade there, $79.87 a barrel. That's for WTI crude, also up 0.19%. Both contracts had risen about 3% to a 4-month high. That was yesterday on elevated U.S. demand outlook and heightened geopolitical risk. Now let's look at some outlooks. Now we see the International Energy Agency. They've raised its outlook for global oil demand for this year. In its monthly oil market published today, the Paris-based agency says it expects the level to grow by about 110,000 barrels per day to 1.3 million barrels per day by the end of 2024. However, the IEA notes that the weaker economic outlook, efficiency improvement, and electric vehicle sales might slow down the growth. Meanwhile, the agency says the oil market might be in a slight deficit rather than a surplus this year if output cuts by OPEC and its allies are maintained throughout this year. And Nigeria has hired investment banks, including Citigroup Inc., JP Morgan Chase, and Goldman Sachs Group to advise its first Eurobond issue. That's since 2022. The size of the Eurobond offer, which is expected before June, has yet to be determined, according to news sources. Economists project that Africa's largest oil producer may raise as much as $1 billion in external borrowing this year to meet its spending needs. And Africa's share of global trade has remained stagnant at approximately 3% or less, but there are opportunities for improvement. This insight comes from Ngozi Okonjo-Iweala, Director General of the World Trade Organization, in an exclusive interview with Channels Television. Take a listen.
Africa's share of world trade has stagnated at about 3% or less for many years, but there are opportunities to improve that, including in Nigeria. Let me start with Nigeria. Nigeria does have many opportunities to diversify its economy and its revenue source. And we were here from the WTO because there's an opportunity to help the country increase its exports of agricultural products. And the Honorable Minister of Industry, Trade and Investment asked for help. How can we improve the quality of agricultural products like cowpeas and sesame seeds, where we stand to gain not millions, but billions of dollars if we can meet the quality and certification standards being demanded by those who import from us. So the WTO has the ability, with small amounts of money, we are not a financing agency, but we have small amounts, 1 million, 2 million, 3 million, and they can leverage billions, because with that we build the capacity of extension workers, of farmers, of agribusiness people. What amount of pesticides do you use? How do you make sure that you meet sanitary and phytosanitary standards so that the people you're selling to, they have certain standards, you meet them? We are able to do that training, and then you see that people are able to sell more and farmers can triple their income. We worked with shea butter producers in Oyo State, and the women were so excited when I met them 2 years ago, telling me how they tripled their income from being able to sell to the EU, to South Africa, to US, where they were not able to. Some of them are still struggling. We are still trying to work with them. The same now with sesame seed and cowpeas. So that's one. I'm just giving you one example.
Well, the Nigerian government has announced a temporary suspension of the Expatriate Employment Levy. That was March 8th, pending further consultation with stakeholders. The decision to suspend the EEL followed a meeting with the Federal Ministry of Interior, Nigerian Association of Chambers of Commerce, Industry and Mines and Agriculture, that's NASIMA, and other stakeholder traders and commerce associations and agencies. But it's a temporary suspension, meaning it can be returned. Let's find out what businesses should do, at this time. Joining us now is Marvis Oduogo, team lead, Taxation, Immigration, Labor and Employment Practice Groups, Stren & Bland Partners. Great to have you on the show.
Thank you very much, Levy.
Fantastic. Well, I don't know if you've been able to use the internet today, but I've been struggling all day, trying to, get my production right with the internet. But it's been a huge headache. But let's get into it now. We're seeing most analysts and stakeholders, they're happy. This is a positive move, for them. Looking at this suspension.
Yes.
But I want to know how you guys at Stren & Bland are seeing this.
Okay. First off, we viewing it that it's not a call to go sleep. It's temporary. And it's good, both on the part of the government. It shows the government has listening ears to what stakeholders have to say, and it's also good both on the part of the stakeholders themselves to give them the leverage to work internally and externally to make sure that things are in proper order. So I think it's a moment of interregnum to enable both parties to fix things and come together. Yes.
Right, but it's a positive move.
It's a positive move.
But I'd like to know, maybe you can break it down, because there are always risks, there are always demerits, there are always benefits with policies. Break it down for me. What are some of the benefits that we could actually get from this EEL?
Yes. So the benefits is that first it's going to increase and develop the skill, local workforce skill. Is going to also help in bringing about the public and private collaboration. It's going to bring it together. It's going to also help to balance the demographic shift. These are one of some benefits that we tend to agree, and also definitely it's going to bring revenue for the government.
Right.
So that's one of it. That's on the government side, but also on the business side, we'll look at it internally in the sense on the workforce for the Nigerian workforce, what they have to get. There's a benefit for them there. But when you look at it from the flip side, the business community is not very, has not taken this favorably. Why? Because the engagement going on all this while did not take cognizance of some of their concerns before the enactment came in. So, and that was why the suspension came at a very apt moment. Yes.
Yeah, quite a difficult time. When you think about everything businesses are having to go through at this time, from rising cost of doing business and all of that.
Exactly.
But talk to me now. Are the risks really that risky? Because most analysts and experts, they've painted the picture, about the risks of this levy. But break it down for me. Is it really that risky?
So the risk is risky, given the timing. So the timing for Nigeria, the economy of Nigeria is still trying to find its way to stability, and the timing is not very, very good. And it also has the effect of duplicity. There are some local content laws in Nigeria that almost provide for something levies of that sort. And bringing it up at this time may be like overheating a particular source. So it's a very risky thing at this moment. But also, when you look at externally, Nigeria have some trade agreements with other countries, especially something like the African Continental Free Trade Area Agreement. The other countries, when they see a policy like this, and they say, what is the sincerity? for the Nigerian government in coming in. And when they do something reciprocal to Nigerians coming into their own country, it will backfire. And also there are many Nigerians with world-class talents in other places doing great things. And with this policy, some of them may receive a boomerang effect of a similar policy from those countries.
So all these other countries don't have any levies on expatriate.
So there are some few countries. I would mention Malaysia, something like Singapore and Saudi Arabia. I remember Saudi Arabia in 2017 had something like that. But if you look very deeply, you find out that they have a stable economy, and the timing for them, they know that their place is a hub, a commercial hub. Even with such policies, investors will still want to go there. But with Nigeria, such policy at the time like this.
But they still keep talking about the opportunities that abound, in Nigeria. So how are we sure, some of these foreign investors won't still go ahead even with the levy? Because they might say the opportunity outweighs, the levy.
Now, that's the good side of the levy. So the good side of the levy is that it's going to compel some of the foreign investors to look deep and actually be sincere in complying with the provisions of some of these local content acts. When foreign investors apply for expatriate quotas and everything, it's expected under the law that they file at least two, they give details of two Nigerians that understudy that very position. So how sincere are they? Because instead of seeing those two Nigerians growing to occupy those positions in the future, we see a situation of where those expatriate quotas are renewed and even shifted and gone ahead to be converted to the CEPAC, Combined Expatriate Residence and Permit and Alien Card. So it's going to push the foreign investors to be very, very sincere and to look back and dig deep and then leverage on other ways. And that is why we are here. What other ways can they leverage on?
And definitely, I don't know if we have an idea what it would have cost, if we're going to move forward with this levy. Any idea?
So if the levy, we moved forward with the levy on the monetary cost for the foreign investors,
right.
For the director, for a director position, $15,000 annually. And then for anyone occupying a position not that of a director, $10,000 annually. So it's an annual thing. But the good side of it is that once it is paid for a particular position, you can, as an organization, you can put in someone to stay off the rest of the duration. So I can come in and it's paid for the position I occupy, and if my tenure, exceeds and terminates within that year, another person can step over and take over from me and stay completely to that person.
And how does it compare with other countries that have these levies? Are we more expensive or cheaper?
Oh, so if you compare it with other countries that have these levies, we are not more expensive. But when you look at it on the other side, that these foreign investors are also meant to pay things like $2,000 for expatriate quotas, and also about $7 million for CEPAC, then you will see that it's a bit on the high side. So when they comply with this and also comply with the expatriate employment levy, then it's something
gets a little expensive.
Yes, exactly.
All right, let's look at, definitely the consultations are going to go on at this time.
Definitely.
But what are you expecting? Is it going to be shelved completely, or there's a possibility it might come back, or they might maybe make some changes to the cost? What are you expecting?
Truthfully, looking at what is going on, I believe it's going to come back, but it's going to come back in a modified way, because all parties would have come to the table and present their concerns, and these concerns will be addressed and viewed from other ends. And then I also believe that it's going to lead to strengthening of the institutions. The Nigerian Immigration Service as an institution that is saddled with the responsibility of enforcing this would now have to sit upright to look deep and see how have we been enforcing or some of these expatriate quota and other levies that have been entrusted into our hands. And then they're going to come back, but it's going to come back with a modified provision, and probably the amount.
Maybe they might cut the amounts, going forward.
Yes.
All right, so definitely businesses would have to, businesses that employ expatriates,
yes,
they need to do something, at this time. Even though it's been suspended for now,
yes,
what should those kind of businesses be doing?
Yes, two things, internally and then externally. So internally, the business will have to look into their record, the expatriate workers' record that they have, to ensure that first it is upgraded and updated and it is accurate. And then they have to be very sincere in examining those records or assessing those records to know, actually, do we really need an expatriate to occupy this position? Haven't we trained enough local talent that can take over from that? And then two, businesses can leverage on technology. I do recall sometime an MD of one of the international oil companies had problems sometime in Nigeria, and an order of the Federal High Court was given, and he was prevented from coming into the country. But that didn't stop him from carrying out his functions as an MD. Why? Because the company leveraged on technology, and this is the time to do that. Leverage on technology, and then also train the local partners that this business have in Nigeria. If you look at the handbook, although it's suspended now, 183 days. Plan a program around it, do a training program before the 183 days within Nigeria, go abroad, call the local partners, invite them, train them. 183 days.
So there's a possibility some of these expatriates, going forward, might have to be replaced.
That is it. That is it at the long run. Or they can leverage on technology and occupy their positions and operate from anywhere around the world.
So this could actually contribute to, protecting local workers.
Exactly.
Going forward.
Exactly. It's a very great tool to protecting local workers and also increasing the skill level of local workers, and then the transparency level on the part of the business, because at the point they will get to say, okay, definitely we have to sit back and look at these things. And I tell you, the remuneration margin may be breached one way or the other.
One way or the other.
Yes.
Well, let's look at one other issue. At this time, with when it comes to Binance, that's the exchange. We've heard that two of their executives will be held in Nigeria, at this time. And the federal government is making some requests, at this time. And it's about user data, that's people that use the exchange. They want the top 100, at this time. But walk me through now, holding these two, executives at this time, is there any risk to us, at this time, holding these two people in the country?
So the only risk I can think of, first off, I know that there are laws that would have empowered the government to believe where there is actual suspicion of infringement or anything. Those laws can empower the government to hold on the two top executives of Binance. But on the flip side of it, where the governments of the countries that their top executives are held, takes that on a personal level. They could engage the government, and then they may come back with one or two I use the word soft threats. Just a week or something, we saw the president travel to Qatar and signed a couple of agreements with so that could be something that may have a ripple effect back to Nigeria, if it is about. The only thing the government can do to ensure that this thing does not go out of hand is to be very, very transparent in the dealings with the two top executives, to be very, very transparent on the reasons they were called in, they were invited, and they were held, and the investigations that are going to be very, very, very transparent about it. And with that, every other thing that may come back may be explained out.
Right, and I'd like to also hear from the legal community, at this time. Is Binance, are they obligated to actually release that information? And when it comes to, consumer data protection, is there any breach here at this point?
Yes, so information held, notwithstanding the confidentiality agreement, there are certain exceptions, and one of the exceptions is when it is requested or demanded by law. And simply that law means an order of the court has been obtained for that and then issued. And once that order is issued, the body, the organization having the information requested is obligated to turn in that. So if that is the process used by government here, then automatically Binance may be compelled to release that, and still we have a solid defense against any case of liability that may fall back on them. Because
so the users could actually sue Binance for releasing their information?
Definitely. But now the question will now be, what defense is at Binance threshold to make use of? And the defense will be, we are compelled by law to do that.
All right, but what are you seeing generally? How do you see this matter ending?
Well, I see that finally the parties will come to a resolution, because it drives my mind to something that happened sometime with the British American tobacco. Businesses are here to protect their interests, and most times they don't want to go the length. And also, government is out for one thing: revenue. And once they are able to secure that revenue, the revenue that ought to come into the government is coming in, then there is something that cannot be. Even under the criminal jurisdictions of Nigeria, we still have plea bargain. So I'm seeing a case of where the parties will come, have a plea bargain, and everything is settled.
All right, we'll definitely be watching out for that. Thank you so much for coming on. Marvis Odwogu, Team Lead, Immigration and Labor Practice at Strennan Bland.
It's a pleasure.
Thank you so much.
Thank you very much.
All right, so we'll take a break now. When we come back, we head straight to the markets. Just stay with us. This is Business Incorporated. Welcome back. Well, Nigerians have been experiencing connectivity challenges since the early hours of today. Individuals have been having a hard time carrying out searches on computers, on mobile phones, as connectivity has been fluctuating in some cases and not connecting at other times. There are confirmed reports from a major service provider that has been an undersea cable cut that's affecting major service providers in the country. Reports indicate that these service providers are aware and seeking ways to work around the affected cable at this time. Well, I hope this is sorted as fast as possible, because my production today has been stalled a lot because I'm not able to even get some of my guests that are supposed to come on via Zoom, at this time. It's definitely a big problem, and you can share your experiences with us, how it's affecting you. I'm hoping that we can get a resolution as soon as possible, and hopefully get it sorted, because we all need our internet at this time. So people lose a lot of money without internet, and definitely that we might have some people might actually suffer some losses at this time. All right, let's get to some other stories now. We see the Export Promotion Council in Nigeria. They've been mulling ways to empower women at this time to change the narrative, when it comes to Nigeria, to make us more productive and export more at this time, so we can get more precious dollars into the country. Let's get a sense of what the NEPC is doing right now. Take a listen.
This meeting is holding after the launch of the Standards and Trade Development Facility, which seeks to improve the nation's exports through the adoption of better sanitary and phytosanitary compliance. The World Trade Organization and the International Trade Center are again restating commitment to ensure that cases of export rejects is reduced to the barest minimum.
Don't let us down. let us see the result at the end of the day so that we can still make effort to get additional assistance to cover other products. You definitely knows what Nigeria is passing through in terms of export-related or agricultural product. And this is the objective, so that when the association members, or rather those producing these items, are fully trained and produce these items to the international standard, and we have them in abundance and we export them freely and get a lot of foreign exchange, then that will be plus to Nigeria, and it will be plus to the international community.
A high level of pesticides is one of the main issues why they have been rejected. And this is the reason why we are here, why we want to support. We want to improve these practices on institutional as well as private sector side.
Both the sesame and the cowpea subsectors present huge opportunities for boosting non-oil exports. While the value of sesame is expected to rise to $9.2 billion by 2032, cowpea is projected to grow to about $9.4 billion by 2028.
This project is very important because of the global demand of this product in the international market, and also the level of consumption of cowpea, particularly in Nigeria. If Nigeria is able to get it right, we can see, even if we have a reasonable chunk or percentage of the market share, we'll see what it can do to the economy.
There are over 29,000 exporters in Nigeria, and this consists of 4,000 women. The NEPC promises to ensure that Nigeria continues to gain more access to the international markets. Sarah Chimugu, Channels Television News.
All right, let's head straight to the markets now. We have Anita with the details. Well, Anita, I hope you're able to get the market with this internet outage we're having at this time.
Ladi, I think just like you mentioned, I listened to you saying something about the internet connectivity challenge. You might call it a disruption, but of course, you and I were back end when we were making our information gathering, which is what we do to our viewers, as well as analysis. We had that challenge. Of course, I got my numbers earlier, but then a few hours ago, it wasn't really challenging.
And this will definitely impact trade, at this time, because we know some traders have to, use their internet, at this time to make some of these trades. That will definitely impact, some of these investors trying to get some stocks, at this time. So if you really check it, some losses will definitely be made with what we're seeing right here today.
And I'm even wondering, because we should have had our guests to talk about the intraday numbers, but I don't know how this internet disruption, how it's affecting trading, because right now trading is done, electronically, and then at the moment, intraday trading session, the market will still. But I'm sure
we might have to go back to the traditional.
The call-up system, But of course, that's for Nigeria. But around the rest of the world, we will be getting more details about how this internet challenge or disruption,
and this
if it's just Nigerian,
this just shows how powerful the internet and how much we rely.
And then you'll be talking about AI in some few years from now.
Exactly.
So I wonder how that will also affect the world, especially the new world order, as things go by. Ladi. So now let's get straight to the market. Intraday numbers. We had our intraday numbers a couple of minutes ago, but this is how the Nigerian, as at the close of Wednesday's trading session midweek, the market was up by 0.09%. Now, we had about 3 consecutive days of gains. First, we had more than 400 billion gained on Monday. On Tuesday, more than 800 billion naira. Now on Wednesday, more than 273 billion naira added. And then the market cap of the Nigerian Stock Exchange, as the total value of equities listed on the exchange, was about 50. It was still within the 58 trillion naira level, but climbing higher even as we speak. Although at the moment the market would oscillate like it always has to bear in mind. But there we have. And year to date, we're at 39.1%. Year to date, month to date, today is the 14th, and the market so far at 4%. But maybe whichever side of the end it would go, either up or down, we would see at the close of trading session for today. Total volume of shares, however, was in the red, 42 down by 42 2%. Now, still talking about the African market, South Africa's JSE is in the red, 0.46%. We had mostly a positive trading session for African markets, what we call the Trading Day Africa. On the other side of the markets, where we see Egyptian Stock Exchange, 0.72% in the green at about 31,237.67 points, while Kenya's Stock Exchange was, you call that the NSE 20, it was in the green, almost 1% for Wednesday at about 97.57 points. That's for the NSE All Share Index of Kenya's Stock Exchange. Now, I'm still dwelling on the Nigeria's fixed income, the financial market, but the fixed income market. What we saw yesterday, we saw a Treasury bills auction. That Treasury bills auction, it was a second time oversubscribed. Last week, we saw the Treasury bills about 1.33 trillion. So it's a way in which the government mops up liquidity and at the same time raises money. So now it shows you that Nigeria's Treasury bills market is still widely sought after because of the higher rates, and that goes in line with inflation. So tomorrow, we'll be having the National Bureau of Statistics to release the February inflation data. Of course, there's been so many projections being made. First from the FDC projecting about 31.04%, while some others are saying within the 30.25 or 30.5%. But whichever of the forecasts, we'll be seeing the official figures tomorrow as from 12 p.m. and then we'll be giving you more details about that market. Now, but for that, still on that same market, which is the Treasury bills market, no amount was announced, but tomorrow we'll be having more details, while about 162 billion naira would be about 162 billion naira were maturing Treasury bills has been expected today for the market. Now let's move over to the okay, so that's your board there. Sorry, I think I was taken away by my script. So as you can see here, the tenor for the offer, we saw the offer, the 91-day at about 721.17 million naira, and then for the rate is 16.23%. The 181 days at a 18.31 million naira, and for about 17%, while the 364 days, that's about a year, 159.85 billion naira at about 17%. So that's it for the Treasury bills market. Let's move over to the other side of the stock market, which is the Middle East, and this time we're looking at the Abu Dhabi, both the stock market, the stock indexes of the United Arab Emirates. Abu Dhabi in the red, 0.08%, Dubai FM 0.51%, about 0.5%. On the other side of the market, Saudi Arabia is a mixed intraday trading session for the market. Saudi Arabia, we call that, or they call it the Tadawul, which is their own stock market index, in the red, 0.29%, while the Qatari, which was the major leader at intraday trading session, up 0.63%. Now, let's talk about the U.S. market. For the U.S. market, we saw that the market there, the stock futures were positive. Today, we'll be expecting the U.S. Producer Price Index, which will be released later today. And that's a program that measures the average change over time in selling prices received by domestic producers for their output. So the investors across the world, across Asia, across Europe, and across the United States will be looking out for that data, which is coming about a day after the country's inflation report was released, which came in line with estimates of about 0.4%, and then a year, that's month to month, and year to date at 0.32%. For the Dow Jones Industrial Average, up 0.32%. As you can see, all the numbers are in the green. The S&P 500, 0.34%, while the NASDAQ at 0.49%. Now, for the last market on our radar, we have the Asian markets, which were, well, a little bit in the mix. It's also expecting, although it had closed today, Asia is about some 7 hours and 8 hours in between Shanghai and Tokyo. That's the capital of both Japan and China. So those markets will be opening later today, local time, but well ahead of us later. But they'll be eyeing the U.S. Producer Price Index, what you call the PPI. But for the close of Thursday's trading session, the Nikkei is still going down at about 0.29%, and then has fallen below the 40,000 level, which you had seen previously sometime last week. The South Korea's Kospi in the green, almost 1% at 0.94% at 2,718.76, while the Hong Kong's Hang Seng Index 0.71% in the red. The other two markets that we look out, the China's Shanghai Composite, it was in the red, 0.18%, 3,038.23 points, while the Australia's ASX 200 in the red, 0.20%, closing the day at 7,713.60%. So that's it for the markets across the world that we give you just in a couple of minutes, Ladi. So Nigeria stock market, fingers crossed, it should contain that bullish sentiment.
Yeah, we'll definitely be looking out for that, and definitely we'll see how much impact this outage had on trades right here, in the country. But I'm guessing it's also going to be a positive close, at this time, because when you look at March, the way March has kicked off, for this market is looking quite positive. Not following the color we had in February. February was definitely a red month, for the local boss.
But sorry, cut you. I think it's quite interesting that March has started off. It was in the red, some couple of days, but then sometime towards the tail end of last week and for the remainder of this week, it reversed, like I mentioned, about 4%. So, and this market is quite interesting because it's a market in which you can put whatever amount of money. Doesn't need too much of capital or amount of money to be put in before you can make your money. You can choose, there's quite an array of stock or equities that you can choose across the insurance, across the banking, across the ICT, so many, and with as little as about 1,000 you can put into any of the copper stocks, and to as well as infinite amounts you can make your money back without any fears.
And the fear before now was, hitting the 100,000 level and, even going higher than that. There was that risk that, if you're coming into the market at this time, there's that risk you might be buying the top. But we've not seen any major drawback, at this time. We did see the drawdown below the 100,000 level, but that didn't last long. Before you know it, the market was back up. But what I'm also interested in is the next inflation data that we're expecting. That's for February, right here, in Nigeria. And we've already seen some projections at this time. I think Financial Derivatives Company, they put it at about
31.04%.
31%. And we might, see that or even higher, at this time. Ghana, we've got the inflation numbers from Ghana. That has gone down, at this time. So it's looking like Ghana has actually gotten it right, when it comes to taming inflation. We're still continuing the battle here, raising rates, at this time. But we don't seem to see the same impact, when it comes to taming inflation. But investors don't seem to mind, from what I've seen so far, in this market. But how are you seeing, by 2024, there are indications that inflation might peak, at some point. We've heard that from FDC and other, experts at this time. But what if it does not peak? What happens to the equities market? That's what I'm thinking about at this time.
Yeah, well, Ladi, your guess is as good as mine because if you take a look at Nigeria, you mentioned something about Ghana, and surprisingly to me, because when I saw that number at about 23.22%, which is coming down all the way from 23.5%, I was kind of surprised because Ghana is a West African country. Ghana is one of Nigeria's contenders, if I will put it, after South Africa.
Yeah, we have that debate about Ghana Jollof and Nigerian Jollof.
Exactly. Because we have on one side South Africa, we have on the other side Ghana, which is a major competitor. So now they've been able to get it right, as you mentioned. But what exactly is the CBN's Monetary Policy Committee not getting right by hiking interest rate? Because I got to feel that it wasn't as a result of increased rate hike, because we've had series of rate hikes which tend not to have tamed inflation, particularly when you look at the 400 basis points.
Maybe just reduce the way the degree by which it went up. That we saw, because we saw that the inflation rate kind of like moderated a little, wasn't rising quite as big, as before the rate hikes. So I think that also contributed to that.
Exactly. And also, it's been a week of inflation data as we had from several countries. We had from Japan. We've also had from the United States. So tomorrow, most likely, I don't see Nigeria's inflation coming down. Sorry to bust your bubble.
Right.
Although I might be surprised.
I don't think there's any bubble to bust there at this point.
Because at some point, I'm wondering how will the central bank of Nigeria be able to achieve that 21% inflation reduction by the end of this year, because most likely the inflation rates will come in higher. Well, we hear FDC saying it's 31.04%, which is quite high. And in about 2 weeks from now, we'll be looking at the end of the first quarter. And of course, with the rising prices of basic food commodities, services, as well as other factors, the inflation numbers are still going to go higher. So, and we will be having just about some 9 months before the end of 2024. So how do you achieve a 21% reduction by the end of 2024?
Maybe by the time we somehow solve the food problem, because at the end of the day, we know that this headline inflation is majorly driven by...
As well as transportation.
By food inflation and transportation. Because,
and insecurity.
With subsidy gone and somehow still hanging in there, we're having to pay a lot, for... petrol and all of that at this time. But at the end of the day, if we can get the farmers to actually, go to the farms and get us all of that output from the farm, then we should see some kind of moderation when it comes to food inflation. But at the end of the day, I feel like the fixed income market is starting to look really, really attractive. We've also
because
seen
the higher rates in line with inflation.
Yes, and we've seen FPI even flowing into that market, even though we've not really seen that much action when it comes to FPI coming into the equities market. But the fixed income market is getting the attention now because the rate hikes are making, most of those yields look really attractive at this time. So I'm wondering, would this be the year for the fixed income market? Because the fixed income market was quiet in 2023.
Exactly.
While the equities market had all the fun. So now...
all the vibrancy.
Yes, and vibrancy. But now do we see the fixed income market holding 2024 down? That's what I'm wondering.
Well, it's kind of interesting that the fixed income markets, and let's not forget, we have it from the news wires that the government is planning to go into the Eurobond market, and of course.
Yeah.
That's timing.
After 2 years.
After 2 years. So, and that's in a bid to raise more money for government. For whatever they want to use the money for. But tomorrow we'll be talking more about that. But I don't think it's a good timing. But I don't know. What do I know?
Because it's really expensive. The Eurobond market, and definitely you're borrowing in foreign currency. But we'll see how it goes. Definitely if they actually do tap the Eurobond market. Looking forward to it. Thank you so much,
Pleasure,
Amanete, for the details there in the fixed income and the equities market. Then again, definitely the internet outage that's still being experienced right now. We've not heard if there's any respite, no reports of respite at this time. Still can't visit some websites right now. So definitely we'll be expecting some kind of comment, from maybe Main One at this time, because there were reports that an undersea cable is having an issue and they're trying to rectify it at this time. Definitely hoping that this is sorted as soon as possible. All right, let's get a sense of what's happening in Europe now. We know that the European Union lawmakers gave a final approval to the 27-nation bloc's artificial intelligence law. That was yesterday, putting the world-leading rules on track to take effect later this year. We have Ekrem with DW to give us the details. Great to have you, Ekrem. So paint a picture for us. What's it looking like?
Thanks for having me, Ladi. Lawmakers in the European Parliament voted overwhelmingly in favor of the Artificial Intelligence Act. This comes 5 years after those regulations were first proposed. The AI Act is expected to act as a global signpost for other governments grappling with how to regulate the fast-developing technology. The co-leader of the parliament negotiations on the draft law, Dragos Tudorakis, said that the AI Act has nudged the future of AI in a human-centric direction where humans are in control of the technology. Big tech companies generally have supported the need to regulate AI while lobbying to ensure any rules work in their favor. OpenAI CEO Sam Altman had caused a minor stir last year when he suggested a ChatGPT maker could pull out of Europe if it can't comply with the AI Act. Altman then backtracked to say there were no plans to leave in the first place.
All right, so how will the AI Act work?
Well, the main idea of the Act is to regulate AI based on its capacity to cause harm to society. The higher the risk, the stricter the rules. AI applications that pose a clear risk to fundamental rights will be banned, for example, some of those that involve the processing of biometric data. AI systems considered high risk, such as those used in critical infrastructure, education, healthcare, or law enforcement, will have to comply with strict requirements. The Act also creates provisions to tackle risks posed by the systems that underpin generative AI tools and chatbots, such as ChatGPT. These provisions would require producers of some general-purpose AI systems to be transparent about the material used to train their models and to comply with EU copyright law.
All right, what should we expect from the markets in Europe today?
Well, Ladi, today investors are focusing on US producer prices index figures and retail sales numbers. Both are critical data points given that the producer price index figures feed into the Fed's preferred inflation measuring instruments, and that retail sales account for nearly half of household consumption. And expectations are for US retail sales to have bounced back in February after a surprise drop at the start of the year, while the producer price index for final demand is also forecast to show a steady increase for the month.
All right, thank you so much. It was great having you, Ekram, there, giving us the details from Europe. All right, let's check some other stories now. We see the Kenyan Treasury is mulling and introducing a 16% tax VAT on bread and milk in a fresh push to boost revenue collections from middle-class households. If this happens, Kenyans will witness a rise in the cost of bread and milk, and definitely we know that once taxes go up on some commodities or products, definitely that's passed on to the consumers. But this still requires a vote, at this time. So we'll be tracking that to see how it plays out for them. And Sovereign Africa Ratings has affirmed its BBB long-term and B+ short-term issuer credit ratings on the South African government. And definitely we got that news yesterday. But right now, we see South Africa has scrapped the sale of its airline there. That's a state-owned airline. There was a deal before now to actually sell the state airline, but that now has dropped through lines at this point. Our correspondent, Innocent Tumosa, reports on this. All right, we'll try and get that report some other time. So right now, let's take a look at what's happening with the markets we track right here. I'm talking about the crypto market. We're still seeing bullish sentiment right there. Still a very, very greedy market. Looking at the board there, we see 88 points, extreme greed. Still a very greedy market, showing that investors are still betting on Bitcoin and most of these cryptocurrencies even going higher at this time. So there you have it, 88 points of 100. Just a few points clear of that 100 level. So definitely, I don't think that has been hit before, talking about the fear greed index at this time, but this is still a very greedy market. Let's look at the cryptocurrency we track now. We see Bitcoin holding on there, $73,000, 323 cents, 0.03% up. That's a marginal gain we're seeing this afternoon. I'm talking about price of Bitcoin. That we see Ethereum also losing that $4,000 psychological level at this time, up 0.40% still, even though it's below that level. But BNB, this one has had quite a dramatic run, seen with the price movement we've seen with Bitcoin and Ethereum. This was trading at about $300 when Binance had all of those regulatory issues in the US, and they're also having regulatory issues right here in Nigeria. But that token, that's the BNB token, still looking quite strong, but it's down 0.08%. And we see Cardano also leaving that 30 cents level it did hold for the longest time, trading at 79 cents, up 2.03%. XRP still around that 60 cent level at this time, 1.55% up. Let's look at the top gainers now. We see, that's it, another meme coin, that's WIF, holding up the top position, $3.27, a big double-digit gain we're seeing for WIF at this time. We know that the meme coins have that big multiplier effect, but they also go down really hard too, 40.28%. Then we also have another meme coin. It's like a meme coin season at this point. Also, that's less than a penny. That's Bunk, 19.96% up at this time. We also have Jupe on the top gainers counter at 95 cents. Up 13.67%. Then another meme coin at this time. This just shows you the sentiment in the market. They're less than a penny. Also for Pepe, 13.55%. We see Solana, $171.50. That's up 12.6%. So it's double-digit gains we're seeing in the market, even though some traders are still expecting some headwinds, when it comes to this price movement we're seeing in the crypto market. We're still having the chances of a rate cut in the US. We know how that impacts this market, but that's been pushed down the line even more. So the investors are still wondering, when is that rate cut going to come? But we're still seeing it's not a bullish sentiment right there. So I'm looking at other parts of the market, looking at the losers chart there. We see it's mostly Arbitrum there. That's topping that count to 7.75% down at $2.06. Ape, that's one of the metaverse plays there, 7.74% down, and another metaverse play. So it almost seems like the metaverse coins seem to be heading down, at this time from what we're seeing in the losers counter. But the gainers counter, on the other hand, having all of those meme coins looking really, really good. So definitely a lot to look out for, in this market. Waiting for that inflation data also coming out from the US. That's looking at producer price inflation. That's also going to give direction for what the US Fed is going to do next with rates, and definitely that's going to have an impact on risk assets going forward. So that's the show today. I hope at some point you have your internet service restored very soon. Remember, you can visit www.channelcv.com if you have the internet for more updates. I'm Ladi Williams from the team right here in Lagos, Nigeria. It's bye for now.